Good afternoon, everyone. I wanted to show you some key technical patterns on the price of oil because I've had quite a few clients ask me, about double bottoms and all that sort of stuff. But firstly, the most important thing on a chart, and I know it's very boring, but I believe that key previous price levels are extremely important. And for oil, that's the $65 level. We're looking at a daily chart here going back to early 2025, and we can see the $65 level is very important. It was a low in March. It served as we now know it's a double bottoming pattern, but you can see this key level, this $65 level, very important level. So you might not be able to see these candle wicks here on the YouTube video, but they come down to around the $55 level. Again, a nice round number. So if we drag this across, at the time, around May, I had clients asking me, well, is this a double bottom? Because we bottomed at 55, we bottomed at 55 again. Now, you could use the positive divergence on the momentum indicators. You got the MACD and RSI making a higher low as the price is double bottoming at 55. So you had the chart told you that there was an entry point there, and you can see the previous low functioned as the new high. You don't know that it's a double bottom, though, in my opinion, until you actually see it break that key $65 level. And if we slide across, we can see on the 11th of June, there was a big candle there. And that signaled that this pattern was in fact a double bottom. And if you're a trader, which I'm not, but if you're a trader, you take the $10 range and you project it up, and that's your take profit level. Now, we did get a bit of a super spike due to somewhat due to some political events that drove that. But had you sold there, quite often, and I talk to clients about this all the time, and some clients did not want to sell the breakout, even though we did buy some oil-related investments at lower levels. It's very common when you get a breakout, what happens? You return to the scene of the crime. So $65, I like to call these magnet levels. It returned to the scene of the crime. You can see once we get to $65, the trading activity compresses. You got these very small candles, not much volatility at that level. And we're at that level again. We did make a higher high. We're retesting the low. So these key levels are very important. So firstly, the double bottom. Don't call a double bottom when you see this, because yes, it has held that support level, and that I agree with, and that was probably a buy. Well, we know in hindsight it was a buy, but you don't know that it's actually a double bottom pattern until you see the breakout, and you can see once it broke, big green candle, and now we're returning to the scene of the crime. That's why I've always got to be careful on breakouts. More likely than not, you will return to the scene of the crime and you will test the breakout over and over again. That's what oil's doing now. So the chart is still looking like a breakout, and it's still looking likely bullish. Thanks for listening. Cheers.